Don't show up, don't come out. Don't start caring about me now. Walk away, you know how. Don't start caring about me now. Aren't you the guy who tried to hurt me with the word goodbye? Though it took some time to survive, yeah, I'm better on the other side. I'm all good already, so moved on, it's scary. I'm not where you left me at all. So, if you don't wanna see me dancing with somebody, if you wanna believe that you can stop me, don't show up, don't come out, don't start caring about me now. Walk away, you know how. Don't start caring about me now. Don't stop caring. I'm not where you left me at all. So if you don't want me dancing with somebody. What's good? What's good, Greg? What's going on, brother?
Mike, what's happening, bro?
Doing good, doing good, doing good. About to get started shortly.
So you got the motivation music.
Yeah. My man got the draft lottery.
Hey, come on now. We #1 pick, baby.
Yes, sir, man. I like that. You got the virtual background with the draft lottery.
You already know.
How's your day going, man?
Good, man. I feel like I've made more progress today.
Off the video? Oh, really? What you
than I have the whole 6 months I done been in this joint.
Really? Those videos made sense?
They did. And it's not that I wasn't familiar. I don't know. I think you gave me the drive to just go at it again. You know what I'm saying?
Right.
And so I wanted to make sure I've been doing it right. But even with the help of your videos, I think it just gave it another perspective. And I did it. And it looks, what I've done so far looks decent. So hopefully you can check me out, see what I've done.
Awesome.
But I'll let you lead the way, man.
Perfect, man. I'm gonna make my goal today is to make this make sense. Pretty much the reason I wanted you to watch those videos because it's kind of like a prerequisite to what I'm gonna be showing, and that way you already have a understanding of what I'm speaking, the terminologies. Okay. But you feel more than happy to if you don't understand, just interrupt, say something. I got a question, and I'll be happy to answer. Okay. So I'm gonna share my screen here for a second.
Let me know if this draft thing is.
Oh no, that's lit. That's lit, bro. I actually like it.
Take that off.
I actually like it, bro. But let's see. All right, let me share my screen, and we'll get going here. Okay. Let's try to see if we get an hour of straight content. This is also recorded, so I will be emailing it to you. That way you can, back test and look at it. Keep looking. All right. So let's see. 1 second.
Just real quick.
I spoke to Trey Sean today, man.
Oh, you did?
Yeah, I think he's gonna get back active and get back involved.
Oh.
Yeah, so he'll be reaching out to you real shortly.
That's good.
All right, let's see. Let's look at this. All right, so right now, so anytime I'm trading, bro, trading is really it's a mental game. It's more you want to be in control of your emotions. The more that you're in control of your emotions, the easier this stuff will become, and you can treat it like a video game. Okay. When I first got started, honestly, Greg, this stuff was like Chinese. I was like, what? What is that? Like, what does this mean? But my current situation at the time was so bad that financially, bro, I was willing to put as much hours into this stuff. So
The stuff I'm gonna be teaching is really my thought process when I'm looking at the chart. And my goal is to break it down to layman's term. I know you've seen it's millions of strategies to trade. People make money trading plenty of ways, a whole bunch of indicators, but my goal is to not use all that. We're gonna be raw price action, naked forex, no indicators, none of that. We're just gonna be looking at the markets like it is. And it's pretty much telling you a story. So every time I'm trading, bro, it's important that I start with a monthly time frame. Why? Because the monthly time frame, I need to see the direction of the market. I need to see what the market has done in the past, right? It wouldn't make sense for me to look at what happened in 2010, 2012, 2014. I'm only concerned on price relevance. And what I mean by that is currently where price is at, right here.
Yep.
Around that 2019, 2020, right? This is all I'm focused about, right?
That's what you said in your sauce video.
Exactly. So if you look at this, like within this little area, bro, is one, like we're in a monthly time frame now. It takes a month for these candles to open and close. So I'm paying attention. It took 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. Bro, almost a year worth of candles in just this little time frame.
Yep.
Now let's see how many pips were in this little box, bro. Over 856 pips, right? And Greg, if you don't know what this is, this platform is TradingView.
Yep. Familiar with TradingView.
You have it? Okay, awesome.
Yep.
Awesome. Okay, so
yeah, I was hoping, not to cut you off, I was hoping to maybe show you. So I drew up 2 charts today.
Perfect.
So I wanted to show you that.
Perfect. When we're done, I definitely want to see this.
Yeah.
So in a monthly time frame, bro, the only thing I'm looking for, bro, is just relative highs and relative lows. When was the last time the market created its highest point, and how long did that last, right? So I'm looking from the price action, right? Price relevance. I'm just looking left to see the last high the market made.
Yep.
When I say the last high, pretty much where price created some type of resistance, right? Some type of resistance. If you know what resistance is, it's pretty much the ceiling. Pretty much what this is telling me is that it's not enough buyers to push the market above this line we drew. Bro,
buyer's exhaustion.
Buyer's exhaustion. So when you see that, it's an indication that, bro, we're gonna see a reversal. Like the market's gonna sell off, right? It's failed to break this high since April 2015. Okay. So I'm paying attention, and typically what I like to do, man, I like to grab my little rectangle and just kind of get an average wick and just kind of like box it out like this.
Okay.
Right. Create this type of demand area, like, you know. And you can change the colors to your liking. I like bright colors, so I know what's happening. Now, once I've identified my relative high, I'm doing the opposite. I'm identifying my relative low, right? When was the last time the market made a significant low, right? And that was back in June, July 2016. So I'm doing the same thing I did at the top, right? I'll put the rectangle to the bottom, the end of the body to the wick, and I drag it across. So the reason I'm doing this is because I want to keep price. I want to trap price in the channel, right? I wanted to bounce off this channel till we either get a break to the downside or to the upside. So
let me ask you real quick. So one of my issues, which might be a blessing in disguise, is I'm very meticulous, but sometimes it's to a fault. So for me, like I'll get caught up in trying to draw like my lines or my charts or my squares perfectly. So like, for example, like I see how you did the relative low. You said you did it from the body to the bottom of the wick. Is it an issue for the relative high? Like, did you use
I use this, you see this first bullish candle that created that wick?
Yes.
I drew from the body to the wick.
Yes, I was going to ask, that little space that you had, is that
it isn't
a big deal?
Yeah, the only thing I'm concerned about is just I need to know the ranges.
The relative area.
Exactly. So if price got up here, like if it touched this zone, I'm looking for a possible reversal.
Right.
So but it's always that first candle that created the wick and that last bearish candle that created the wick, right, on the down. on the resistance, it's the first bullish candle that created that wick. On a support is that first bearish candle that created that wick. Body to wick, drag it across. Okay, so this is my thought process in the monthly time frame, and obviously I'm focused on price relevance. This little blue square, okay. And the only way I can know what's happening is I need to go to the next time frame, which is the weekly time frame, right? So what I'm currently doing right now, Greg, is we call it time frame correlation. Okay.
Yep.
So it's telling me a story, what's happening, right? So just with the naked eye, at some point I need to be looking for a buy position, right? At some point we know price is gonna get to this little zone, right? It might bullshit around, you know, consolidate before we get to the next portion. But right now it's our job as detectives to figure out what clues is the market leaving for me to take this potential buy to the upside. Okay, so this is my thought process. So now let me take this out. So now we're in the weekly time frame, right? Each one of these candles it takes a week to open and close, right?
Mm-hmm.
I'm paying attention. Kind of the same thing we did in the monthly time frame. I'm looking at the relative high, right? Now I usually don't do market structure on the weekly time frame. I only do it on the daily time frame. But let's make sense out of market structure so we know where we're at in terms of structure. Okay.
Mm-hmm.
So you got our we have our lower high right here. We have another lower high right here. And we have our, I'm not gonna do the whole thing, but just want to.
Yeah.
Okay. So we know we're in a downtrend, right? So there's a strong possibility that, bro, we can probably sell it some more down here before we see a reversal. But the only way we know that is if we break it down to a small time frame. But let's see how the candles are. So on a weekly time frame, I'm looking at candlesticks. What are the candles telling me, right? Who's in the market? Are the buyers in the market or are the sellers in the market? I know I'm at a lower high position, right? I know these wicks right here are telling me, okay, there might not be enough sellers to push this market to the downside, right? It's telling me, man, we might want to just reverse this thing back up, right? And here's the sign, bro. What is this? What is this saying? What is this?
So can I try to answer that?
Yeah, definitely answer. What is this saying? This part right here.
So I just studied this. Hold on.
What is it telling you?
So, well, if it's taking both of those two so you just drew our support.
Yeah.
So that means that would that be bullish engulfing?
No.
Starting?
Bullish engulfing. So
okay.
Weekly time frame, I'm paying attention to candlestick analysis and price relevance. So Greg, this overlap right here is telling me it's a lot more buyers in the market than sellers, right? This overlap, right? This random line I drew, this overlap is telling me on a smaller time frame, structure broke from a downtrend to an uptrend. This bearish candle on a smaller time frame is just a retest candle. So the only way we see it, we got to go down to a smaller time frame to make sense out of this, right? Okay.
Yep.
So from the weekly time frame, we know we're at equal lows, right? They're equal lows. So can we say, okay, maybe in the smaller time frame, we can be buying this market all the way up, right? This is my thought process. I'm like, okay, I see wicks right here, 2 long wicks, multiple wicks telling me sellers are exhausted. There's not enough sellers to push this market to the downside. So there's a possible chance this thing is going to reverse. So we're ready. We're calculating all this information from the monthly, from the weekly. If you can't store a lot of that information in your brain, just write it down, right? I started out, I wrote everything down. Monthly time frame, this is happening. Weekly time, this is what I saw. Daily time frame, this is what's happening. So it helps you track and not lose the direction of where your bias is at. Okay.
Mm-hmm.
So now this is when we do our structure, right? It's gonna tell us more story, right? It might change our bias from the weekly because now you're seeing more details, right? So
Mm-hmm.
now we know we're at a low, lower high right here, right? Could this be another potential lower high? Could be. Could we still get that this bearish candle going out here to create another lower low? Could be.
Mm-hmm.
Could be. We don't know, right? We don't know. Now, watch this. Watch this. This is powerful, man. I actually made, I don't know if I told you, but I actually made so you see this blue candle right here?
Mm-hmm.
So quick story. So I got my stimulus check Thursday. And this was the candle that made me my money back off of $200, bro. I did it in 2 hours. And I withdrew $800. I don't know if you saw in the group chat, but this shit is crazy. It's real. Right now, I'm in a trade right now, actually, for gold. And we can hopefully this thing pays me, man. But gold is she's very volatile. But anyways, so we're probably at a lower high. We're probably at a lower high, right? But I need to go to the smaller time frame and get more detail as to what's happening. Now, do you know how to use Fibonacci?
No, I've heard you reference it.
Okay. So we're gonna explain fibs right now. So what Fibonacci is?
It's a decimal of some sort. I remember it was like 32 something and 28, 27 something.
Exactly.
Yeah.
So we're gonna PRZ. PRZ means price reversal zone. Price reversal zone. All right. So there are 4 main price reversal zones. 38.2, 61.8, 78.6, 88.6. Okay. Your 4 main price reversal zones. So the purpose of the Fibonacci, bro, it just helps us measure out the next level of structure. So, for example, on a downtrend, right? If we knew we were at a lower high and we created a lower low, what the Fibonacci does is it helps me retrace the next lower high.
Okay.
On a downtrend, the fibs helps me measure out the retracement of the next lower high. Hold on 1 second, bro.
Okay.
All right. It helps me measure on the downtrend. It helps me measure the next lower high. On a uptrend, right? The fibs helps me measure the next high low.
High low. Mm-hmm.
Yep. So anytime you're in the downtrend, you're gonna draw the fibs from top to bottom. You draw your fibs from top. Let me do it again so you can see. So the fib is right here in your toolbar. Click the third icon, fib retracement. Okay.
Okay.
Fib retracement. Anytime you draw the fibs from on a downtrend, you draw from the previous high to the recent low. Okay.
Okay. Do you start from like the highest wick or anything?
Good question. I try to get an average of the wicks. I want all the wicks to touch, so I would draw. So the 100% will be at preferably a bullish and bearish candle wick has to touch, and on the lower low, a bearish and bullish wick has to touch. So on a uptrend, I try to get an average of the first bullish wick and the first bearish wick, and on the lower low, I want to get the first bearish wick and the first bullish wick. Okay.
Okay.
So on a downtrend, the lower high will be at 100%, the lower low will be at 0%. Okay. We'll draw one more time so you can see it. Boom. and drag it down. Boom. Okay. All right. So
Okay.
here's an example. All right. So anytime price lands on 38.2, we're looking for strong, impulsive moves, right? Looking for strong, impulsive moves. What do I mean by that? Right? Say this is a downtrend. Hold on a second. Say this is our downtrend. All right. And we drew our fibs from this low high to this low low. Right?
Gotcha.
We gotta test. So anytime price lands on this 38.2, there's always gonna be a strong impulsive move to the downside. You'll see it might be like consecutive on a downtrend, it might be consecutive bearish candles just going, right? It happens every single time, right? On the reverse, if it's on an uptrend, when that high low lands at 38.2 is gonna be either a big ass impulsive candle or like consecutive bullish candles to the upside. Okay.
Now, do you only use Fibonacci on the higher time frames?
So I use fibs on the higher time frame, obviously the daily time frame and the 1 hour time frame. So anytime I identify market structure on the daily time frame, and for example, say we identify
He is flying.
And we identify that this is the lower high.
Yeah.
I'm going to the 1 hour time frame to see how we can take advantage of this entry, this sell opportunity. So from the daily, we go to the 1 hour, then we go to the 15-minute time frame to enter the market. Okay. So pretty much what I'm doing in the daily, I'm doing the same thing on the 1 hour.
Gotcha.
That's it. The fuck? One second. What?
Hope that means somebody else just got wealthy.
1 second, bro.
Yeah.
All right. You good, bro?
Cool.
I thought I hit a lottery. No, I'm kidding. But no.
I wouldn't disbelieve you.
So, okay, yeah. What did you ask me? Yeah, did you ask me something?
We were just talking about what time frames to use the fibs on.
Yeah. All right, so 38.2, bro. Strong impulsive moves, right? Uptrend. If we're in an uptrend, boom, it's going to strong impulsive move to the upside. The downtrend, strong move to the downside. Now, downtrend. I mean, 61.8. Anytime price lands on 61.8, bro, we're looking for market patterns. Do you know what our market patterns are?
Market patterns.
So,
like head and shoulders or something like that.
awesome, good job. So on a downtrend, right? If price lands on 61.8, we're looking for some type of double top, right? Triple top, head and shoulders. It's inevitable. It does it all the time. On a uptrend, if it lands on 61.8, we're looking for what? Double bottoms, triple bottoms, inverted head and shoulder. Okay. On a uptrend, it would be double bottoms, triple bottoms, inverted head and shoulder. On a downtrend, double top, triple top, head and shoulder. Those are the patterns you're looking for. And I'm gonna show you real live examples as well.
Okay.
All right. On when price hits 78.6, we're seeing the same thing: market patterns and slow trend. What do I mean by slow trend? Meaning, if price lands on 78.6 and it creates that pattern, it's going to be a slow trend going to the downside. Market's going to take its time. It's not going to be as impulsive. You might be in a trade for 2 days.
So a lot of consolidation, basically.
A lot of just more so tight trends. Boom, like real tight. Like come on, consolidations here and there. It's just like come on, man. All right, that's what you can expect from 78.6. But first you see the market pattern, then you get the slow trend. Now 88.6, straight slow trend.
Okay.
Slow trend. What in the world? Bro, my ex is like texting me, bro.
They always come back when the money get right.
Oh no, she's sending me. I used to live with her, man. So like old mail we're going to her.
Oh, okay. Don't fall for it, bro.
Oh nah, we're done. All right, cool. I'll read that later. All right, so 88.6, man, you're experiencing slow trend. Does this make sense?
Yeah.
Okay. All right. Now, within the Fibonacci, there are also 2 other numbers I want you to be aware about, but they're not the PRC levels. You got 23.6, which typically will be consolidation or continuation, right? Meaning if it lands in 23.6, you'll see a whole bunch of consolidation, or sometimes it will just hit it and continue, right? When price comes to 100%, we call this 100% retrace. We say lot up. Put all your eggs in one basket. Put all your money. Put your whole account. Risk it, right? Risk it. Anytime price does 100% retrace, I love it. I put 1,000 in here. It's supposed to be 100. Let's see. Okay. 100. Yep.
And that just means it's just gonna continue going in the same pattern it's going, whether up or down.
Yeah. Say it's like, so this would be an example of 100% retrace. So if this was this would be, that would be 100% retrace. So if this was, watch. Right, that would be 100% retrace. So this is where you want to lot up, put all your money in. Right, 100. It'll create like kind of like a double top. But when price breaks, because you know this right here was the last lower high. But you gotta understand when price breaks, opens and closes above this lower high, structure is broken.
Right.
Right, structure is broken. Now let me ask you this: Would this be considered if this was a candle, right? If this was a bullish candle, would this be considered? Would you say structure broke right here. Would you say structure broke?
If that 100% line is the resistance line,
Good job.
and that candle
Right.
broke resistance.
Or when, okay, how do you know when structure is broken? Let me ask you that.
You know when structure's broken once the next high point exceeds the previous high point.
All right, and what do we need to see to know that it's happened? To know that that's happened?
A retest.
No. What does the candle have to do?
Oh, it has to fully close, or
Good job. It has to fully open and close.
Fully open and close.
So right in this case right here, this is a tested candle. Right, it didn't open above and close. Because bro, you see situations where the market will manipulate you, right? The market will do this. Everybody, oh man, I'm buying. Get out of here. Taking people out the market. So it's important to know that the only time we know this is valid, right, a valid break of structure is when if this bullish candle, boom, open and close above that lower high. That's how we know structure is broken. But if it's chilling, even if the wick is touching it, bro, I don't consider it broken till I need to see everything above that line. Sometimes you see situations where the wick is touching, and it'll go to opposite side.
And which line are we looking at? Are we looking at the 127?
No. We're only focused on the 100%. Anything above
100%.
Yeah. 100%.
Okay. And when you say open and close, you just mean it's a full body?
Full body, wick, and everything above that line.
Okay.
If the wick is touching that line, I don't trust it. So you see situations where the wick is touching, and you see like baby, like small little bullish candles with not enough bodies, just small bullish candles wicking. Like, and it looked like it's broken. It's just, and I'm gonna show you some examples. It's just small bullish candle wicking, and people think, oh man, they open and close. Nah, those are not full candles. They're dojis, indecision candles. Exactly. So next thing you see, boom, everybody get out of here. Give me that. This is what the market does all the time. It entices you to take a position, but if you're not aware and paying attention to these little details, bro, your account will get blown. I've been through the hardship, man. My goal is to make y'all not go through that stuff. So I'm telling y'all that all the important things that I went through. So 100% lot up, right? This is Fibonacci. Some people on IM, they teach it differently. They have different numbers, but bro, some of the information I'm teaching right now is a combination of other courses I purchased a while back and some of IM. So I just kind of put it together and formulated my own way that's giving me the most results.
I think that's an area of focus for me. I think I understand it from a conceptual standpoint, but I feel like I could see that me being hesitant right at that point.
Right.
Just because I want to really know when it's fully opening and closing. Because when you were talking about the wick just now,
it was like, it's kind of hard to see. I'm gonna show you some real life example, and you be like, oh.
Yeah, maybe that'll do. Because I'm pretty sure I know what you're talking about.
Let's see. Boom. Let me clear this stuff up. All right, are you good with this?
I wrote that down.
I can delete it?
Yeah.
Okay. All right. Let's get back to this. All right. So we saw, matter of fact, let's work down up. All right. When we saw this lower low, right? Automatically you saw all the rejection. We saw we're at a support level. We saw that, the multiple wicks on the candle. If I see 3 to 4 wicks on the candle, I know reversal is gonna happen. Bro. If I see 2, I'm like, that's why I really think this is still a buy, because this is not enough. Look how this candle opened. No wicks, it just dropped. So this is a retest on a smaller time frame. Okay, so you got to pay. The candles tell you a story, because when candles form, it has to wick. It has to like wick. It's like buyers and sellers have to take positions, in a sense. So when I'm seeing this, I'm like, okay, man, what's before that bullish candle happened? I'm like, okay, what's going on down here? I'm curious. What's causing this wick to happen, right? So from the daily, I'm automatically going to the 1 hour time frame. 1 hour time frame. Right? Everything in this box is what we saw in the bigger time frame. Okay. So what is the first thing I'm looking for? What is the first thing I'm looking to identify in the 1 hour time frame, Greg?
What's market structure?
Perfect. Market structure. Where am I in terms of structure, right? And I do that by, I'll label the shit again. Lower high. Make this smaller. So I would just look for my this lower high right here. All right. So at this point, and I didn't tell you, at this point, when it comes to the fibs, I'm grabbing my fibs, right? Well, let's put this the lower high. That's the lower high. So I'm grabbing my fibs, low to bottom. Right? All right. So I'm gonna challenge you, Greg. Before all this happened, right? Where did we get that landing on that fib at? Hold on. Let me take this. Let me take 1 second. Let me take this stuff out. We know where we're at right now. Before all this happened, where did we get a retracement at? Ignore everything in the box.
Okay. So when you got your first,
So this how we knew we found our lower high.
Got your lower high.
We just created our lower low down here, right? Where did price? Like I said, we need the Fibonacci to retrace the next level of structure. So at what percentage did that next lower high land
on? 0.
Nope. In terms of structure, so we go from a lower high to a what? Lower low to a lower high. Right? So we got lower high, lower low. We pull out the fibs to measure the next lower high. Where did that next lower high go to? 38.2.
Okay, that's what you're asking. Okay.
38.2. So this is so when you're measuring structure, right? It's only valid, like the next level of structure is only valid when it hits 38.2, 61.8, 78.6, 88.6. Now, say for example that this lower high, well, this right here was at 23.6 and went down, right? For example, let's just do it like this. I know this is not, boom. So say this was 23.6, right? And went down. Would you consider this a lower high?
Yes. Well, that's going to be a lot of consolidation, right. So I would say no.
Right. So it's not a lower high unless it hits 38.2, 61.8. Because there were times, bro, when I used to trade and I would see 23.6 create like a lower high, right? And it would continue. It would create a continuation, and then it will go back up. I will show you. Matter of fact, I'm gonna show you an example of that, because that used to lose me a lot of money, and I feel like you guys got to know that. But it's only a level of structure once it lands on 38.2, 61.8, 78.6, 88.6. Okay.
Okay, that's cool to know.
Yeah. Very, very important. Very important. Very important. So you see how once it landed in 38.2, we had consecutive bearish candles.
Mm-hmm.
Right. Okay. Now, once that happened, right, I identified my lower high. Now, on a bigger time frame, Greg, we know that we're looking for possible reversal, right? Where we were at a lower low. Right now, we're at a low low on the daily time frame. And we know we're almost at that zone in the monthly time frame. We're looking for a possible reversal. So the only thing I'll be looking for, bro, average wick, break of this lower high, break of structure. You following me?
Mm-hmm.
Looking for break of structure, right? This candle right here.
Which we did.
This candle right here told me, why did that candle confirm that structure, bro?
Because it opened and closed above
Perfect.
structure.
Perfect. So when it did that, it created.
So while I'm on that, so it's still considered. It's still open and closed with a wick.
Mm-hmm.
Okay, I thought maybe it was just a full body.
It has more body, right? The one to the left of it, bro. That's not a candle.
That's a doji.
It's a doji. Look at all these bullshit candles just trying to.
Yeah.
This is what I needed to see to say, okay, boom, structure is broken.
Okay. Okay. That's what I needed to see. All right.
Now created a higher high. Right? So when this happens, all I'm doing is what? Grabbing my Fibonacci. We're drawing it from low to high. Average wick. Low to high. Okay? Low to high. So we draw low to high so we can measure the next high low.
Okay.
Correct?
Right. And that's 61.8.
So this is kind of like 61.8, 88, 78.6 is the same thing, right?
Okay.
Watch this. So anytime price breaks structure, we know the retest is going to happen. We use the Fibonacci to measure out the retest.
No, it's a market pattern. And it just shot up. Night.
All right. So now let me challenge you, right? Let me challenge you. Now, box all this out. So when price finally came down to 78.6 and wicked it, Greg, are you taking this buy?
I am.
Why would you feel confident taking that buy?
Because I know the market is going to have slow moving patterns in an uptrend. If we're already at a higher high,
right,
and it's doing a retest to a higher low, and the fib is hitting 78.6, then it's about to.
You confident that you take it, right? Perfect. There's nothing wrong with that. But look at your notes. What happens at 78.6 and 61.8?
It market patterns form in it.
Did a market pattern form when that candle went up there? No, it didn't. Don't look at anything in the box, in this black box. It didn't happen yet. When this happened, there was no market pattern. But when this happened, I waited. I said, bro, I know the rules. When price gets to 78.6, I need to see at least a double top, inverted head and shoulders, something.
Okay.
Now look what ended up happening when it came back down. So it was people buying this. I'm up 50, 55 pips. But guess what happened, Greg? When the market started retracing, they started panicking and closing their orders. And man, this market's bullshit, man, blah, blah, blah. Guess what happened? Created a double bottom, shot to the moon. So it's important to know what happens on these levels, right? So you can confidently take this trade. When this happened, when that bullish candle hit that 78.6 and shot up, bro, I didn't panic. I was cool. I was like, man, this thing coming right back. I'm gonna see some type of pattern if I take this trade. Because essentially what's happening, Greg, is When the market is creating this double bottoms, triple bottoms, there's a break of structure on the 15-minute time frame.
Mm-hmm.
That's what creates this. All this right here on the 15-minute time frame is what we just did on the 1 hour time frame. This is a break and retest on the 15-minute time frame. So my thought process when price hit that 78.6 the first time, bro, guess what I did? I said, you know what? I know I'm at 7. I took the fibs out. I know where I'm at, 78.6. I need to go on the 15-minute time frame to see a break of structure and a retest. Time frame correlation. Right?
Okay.
Let it sink in, because it right now your brain's gonna be like, yo, whoa, wait. This shit is crazy, bro. It's simple. It took me a long time to learn time frame correlation, because what you're doing on a daily time frame, right? You're doing it on the 1 hour, you're doing it on the 15, right? It all has to align.
Mm-hmm.
This is the part people get confused at. This is the part people don't learn, right? This is what the 7-figure traders do. So once this came to 78.6, bro, I say, you know what? I'm going to the 15-minute time frame. Let's go see it. Let's see it. All right. All this right here was that big ass candle we saw in the 1 hour. Bro, only thing I'm identifying is market structure. So what am I doing, Greg? Lower high. It's the last low high. What am I doing? Average wick. What am I looking for? That candle that did that thing. What am I waiting on? Double bottom. Retest. Right? We know we're at the 78.6. Or, bro, what's stopping me from using the fibs again on the 15-minute time frame? We know where we're at. Look. 88.6. It's kind of 78.6. What is it creating here? If we went to the 5-minute time frame, what do you think this pattern is? Triple bottom. Double bottom. You don't believe me? What?
And what are we? We're just considering two or more full bodies, like a double bottom or triple bottom.
So anytime price is in that 78.6 range, bro, you're gonna see a lot of double bottoms, triple bottoms. It's just a lot of market patterns. Like, it's just 15-minute time frame is our entry time frame, bro. Right? So if watch this. This is, and I think when she watched this video over and over again, you'd be like, oh wow, this is crazy. So we knew in the 1 hour time frame we were at a 78.6, right? We waited because we knew at 78.6 we're gonna see market pattern. So in order to confirm when it was ready, we had to come to a 15-minute time frame to see a break of structure. Once the break of structure happened, all we simply waited on was a retest, right? So in the 15-minute time frame, just to get more confirmation or do more homework, we grab out fibs, low to higher high. Price came back to 78.6 on the 15-minute time frame. To get more confirmation, we said, okay, what? Let me go to the 5-minute and see if I can see a market pattern. Just to see. Look what we saw. Look what we see in the 5-minute time frame. What does it look like to you? Boom. Now, I didn't need to come to the 5-minute time frame to see this, right? Because we already knew in the 1 hour we were at we touched the 78.6, and we knew it has to come back and respect it. So this is just for learning purposes. I don't need to come to the 5-minute. So in the 15-minute, once we came to this same level, bro, the only thing I'm looking for is a what to enter this market. What type of candlestick analysis am I looking for?
You're looking for bullish engulfing.
Bullish engulfing or bullish variation. Come on, man. Bullish variation. Multiple bullish candle overlapping a bearish candle. Bro, when I saw this and I knew what I was doing, Greg, I didn't hesitate, bro. I had $200. I was trading with $6. I made $600 off this move. Had I held this trade, if I would have held this trade, bro, because my entry was right here, this black line,
Mm-hmm.
I would have made $1,200, but I didn't hold it
Mm-hmm.
because I had take profits, and this is how you do your take profits, right? So once you've entered a trade, bro, you're monitoring your trade on the 1 hour time frame. You're going back to that level of structure to monitor your trades, right? So what I ended up doing, bro, I grabbed my fibs. No, right here. So I grabbed my fib, boom, to high. Bro, anytime I do my fibs like this, my TPs are negative 13% is TP1.
Mm-hmm.
Negative 27% is TP2. And negative 61% is TP3. Bro, look how many pips from our entry these were. This was 30, 39, 60. And it smashed right through it. Now, what if I told you I knew where price went? I knew why price went up here. But anytime I have a small account, I don't make it a priority to hold trades because the goal is to build it to 1,000 faster. Now, when I have $1,000 in my bank, in my broker account, now I can afford to hold trades for a long period of time.
Okay.
So that's my thought process. So yeah, I could have held it, but nah, I need to build equity. Build your equity. That's most important. But yeah, so those are my TP levels, right? How do I know when to get out the trade, right? Once it hits my TP, I'm taking it. Or if I wanted to hold it longer, right? Say I just wanted to hold a trade. The only thing I'll be looking for is on the 5-minute time frame, I'm looking for a break of support. That is all. So if we, for example, say we held this trade, right? And also, what time is it? Okay, we're good. Okay. For example, if we held this trade, right?
Mm-hmm.
And say we entered at our entry point. Only thing, this would be when I got out the trade. This would be when I would have got out the trade. Right? Once I got, this is on support level. Once this happened, once I had a bearish candle open and close below this line, I'm out the trade.
Okay.
So say you didn't want to do a TP, you just wanted to watch it. Once price start creating a resistance, identify the major support. Once you see a break, get out the trade, bro.
Mm.
That's a very, and I should have did it with this, man. But I was trying to get my money back, bro. I was trying to get this back, bro. So, but yeah, bro, this is really in a simple way. This is how I trade, bro.
Okay.
I got good at it by just back testing.
Mm-hmm.
So right now, what's going to happen is I'm looking for a possible potential buy entry, right? So watch this. Boom. You see how this was our first resistance area? Bullish and bearish candles make a resistance. You see how it landed at 23.6 and continued?
Mm-hmm.
Create that continuation.
Mm-hmm.
So when that happened, bro, all I'm doing is this. Once it created at the next level, all I'm doing is dragging this up to the next high. Now pay attention. This is the most important part right here. I'm going to explain. Once I drag it to the next high, right? People feel like, oh, once this might be a 38. Like, you know how like I dragged it, like it was right here, 23.6, and when I brought it up here,
Mm-hmm.
now it's like it's at 38.2. No,
Mm-hmm.
it's still 23.6. It is still 23.6.
Yeah, you just stretched it out.
Exactly. So now what price is doing, it's ranging. It's trying to find what? Another level of structure. We're trying to find a new high low.
But why would you stretch the fib out like that anyway?
Because you have to, because where would you put it at? You have to stretch it because 23.6 is not a level of structure. Had this been 38.2, I would have did some shit like this. 23.6 is not a level of structure. So it's not considered
Oh, you're saying that's not a support level?
It's not a support level. It's consolidation continuation. Exactly. So that's why. So now only thing I'm looking for is price to find that support area at our PRZ level. Clearly, this wasn't enough. Boom, 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 dropped. Now we're at 61.8. So the only way we know it's found that support is we need to find a break of structure on the 15-minute time frame. So when you see that break of structure on the 15-minute time frame, then you know it's found its support on our PRZ level. Because you see right here, you might be like, okay, it was at 38.2, but what happened? Watch this. Let me take the fibs up. Do you see a break of resistance? Break of lower high? Nope. Test it. Now, bro, if this would have happened, then we would have found support on the 38.2 on the bigger time frame. But since this didn't happen, it's telling me, okay, 38.2 is not a strong area. Let's go to 61.8. If it does the same thing on 61.8, then it's going to 78.6. Till we find that break of structure in the 15-minute time frame, it's going to let us know where it lands on the 1 hour time frame. Yeah, this is you getting some juice. Your head gonna hurt, man.
It's starting.
You're getting some value because your head gonna hurt. So right now, all I'm waiting for is, okay, what's gonna happen at? And it's funny, bro. I sold this market last night. I made $200 last night. I sold this. I woke up this morning, I had $200, and I caught. And my TP, since I knew it had to get to 38.2, and this is counter trending. I don't advise new people to do this. Always, but when you get good, you can identify and process it. So I knew it didn't break that resistance in the 15 minutes. So, bro, my TP was 61.8, which was 1116.45. And once it hit it, took me out of the market, $200. Now, the main objective is we still want to buy it. So I need to see a break of resistance around this area for me to even consider this a buy. So I'm gonna be looking at this market this week.
Amen. Amen.
Can you hear me?
Yeah, I can hear you.
You got a question?
Okay.
Is it making sense to you?
It's making sense. I'm gonna have to practice it a little bit.
Absolutely.
Obviously.
Absolutely.
But number one, I'm super appreciative. I have to make a hard stop only because I got job stuff to do at 2. So okay. I got another call that I have to jump on, but I don't want you to feel like I'm rushing you.
No. Also, listen, I'm gonna send you this video, and I'm gonna send you another video. I did a similar video like this with a group of people last night with more detail. And bro, just watch it. Then we'll Wednesday I'll see. We'll hop on, and I want to see some of your work.
My man.
All right, brother.
Thank you, bro.
No problem, man. You have a good one.
Take care.
All right.